and achieve business growth. This particular model is a base model for a pasta manufacturing business. Model has been designed for you to forecast up to 60-month operating budget and cash flows with a relevant set of assumptions around cost of goods sold and expenses, and to then add on to the detailed revenue forecasted streams. The main elements of this model are startup summary, revenue analysis, income statement, cash flow statement, balance sheet, break-even analysis, sensitivity analysis, and the dashboard. Starting off with the input sheet, it gives an overall view of the business operations plus all the assumptions that are particular to your own business and can be changed accordingly. The revenue analysis has been divided into three parts. One is the production, which consists of the capacity constraints of the business. The other is the revenue, which consists of different revenue streams based on different types of products. And the last one is the cost of goods sold. And this sheet is used to calculate revenue and cost for each month. The inventory sheet includes the monthly inventory needs of the company. Startup summary gives a comparative analysis of the total funding versus total expenses for the first year. It also gives the total variable costs and total fixed costs for year one, the startup expenses, and the startup assets. The details of external fundings are given in the loan schedule, which gives the monthly payments for all 60 months. The monthly depreciation expenses for all the fixed assets owned by the business are included in depreciation table. This model consists of a monthly income statement as well as a yearly income statement. We start off by calculating gross profit and then move on to calculating operating profit, profit before depreciation and taxes, and finally the net profit. The profit in this case is positive for all 5 years. The cash flow statement is very crucial for a financial model because investors are particularly interested in knowing the cash generating abilities of a business. This particular cash flow statement is divided into three streams: the cash coming from operations, investing activities, and financing activities. The balance sheet gives a detailed overview of the assets that are being used by the company and the equity and liabilities that are going into your business. The break-even analysis sheet is used to calculate the break-even sales for all 5 years. This is a very important sheet, sensitivity analysis, which gives the revenue, gross profit, and net income in four different scenarios. The first scenario is the actual plan. The second scenario is the low or pessimistic scenario. The third one is moderate scenario, and the final one is optimistic scenario. The figures in these scenarios can change depending on the risk and return factor of your company. For instance, if you change the cost of goods sold to 40, uh, 80%, and the revenue to minus 20%, all of these figures would change as well. This sheet is used to do a diagnostic analysis of the business. It calculates different ratios from income statement and balance sheet, and this analysis is inbuilt, comes from an inbuilt function which will be generated automatically. The project evaluation sheet consists of the cost of capital, expected growth rate, the future cash flows, the present value of future cash flows, the terminal value after 5 years, net present value of the business, internal rate of return. Finally, moving on to the dashboard, which gives a very good visual representation of the financial performance of your company. Thank you.